talk about the culmination of the operations budget in the form of the budgeted income statement. This aggregates previously discussed budgets. Specifically, it's a pro forma income statement, a what if. This is what we expect the world to look like for the next accounting period. And managers can use these projected outcomes to manage inputs. They can also base the pro forma income statement on desired profit. So after having gone through the budget process, they can see what the budgeted income statement will look like. And if the projected income statement numbers do not meet the desires or the needs of the firm in the coming quarter, they can go back and revise the other budgets in order to achieve the target that they wish. So let's turn to Hogarth's budgeted income statement and build it using the component budgets that we just created. First off, we start at the beginning of the budgeted income statement, and that is the sales revenue that is projected. This number, $1,240,000, comes directly from the sales budget that we created at the beginning of the budget process. Next, we have cost of goods sold, which would be the direct materials, direct labor, and overhead costs that are required to create the goods that we eventually will sell in this accounting period. Now, notably, this total number is not the sum of the direct materials, direct labor, and overhead budgets, because some of the costs that we've incurred remain in inventory and won't show up on the income statement until the period in which it's sold. Because we've created goods and incurred costs but haven't sold them yet, some of these costs will remain on the balance sheet in the form of finished goods inventory. So this $1,062,043 represents the materials, labor, and overhead costs that we've incurred for those units that we have sold in the current accounting period. The difference between sales revenue and cost of goods sold yields gross margin or gross profit. And for the year, we expect $177,957. Our selling and administrative budget told us that we expect to spend on both variable and fixed selling and administrative expenses $166,000. Subtracting that from the gross margin yields operating profit. One thing we haven't reviewed is that the Hogarth managers expect to have some interest expense, and that's minimal at $100. Subtracting that provides the amount of income before taxes, $11,857 for this year. And then income tax expense occurs. We assume a 35% tax rate. 35% of income before taxes is equal to $4,150. And after paying those taxes, net income results in $7,707 for this year. As we will see, managers will use the budgeted income statement to guide the rest of the budgeting process, and it will serve as a major input into the financing part of the budgeting process, including the cash budget.